But in the meantime, Piramal Enterprises got into a bit of a wobbly zone, but now it's stabilizing around that 29.80 level in trade as we speak. And that's pretty much the case with the markets. We've considerably come off from the top of the day. We're still clinging on to that 10,087 mark. Broader markets, though, have cooled off quite considerably. So as we speak, the mid-cap index is floating in the red. It's down about almost 0.3%, and it's completely flattened out and turning towards the red now for the mid-cap index as well. But Amit Nigam, he's the head of equity at Peerless Mutual Fund. He joins us on the show right now. Amit, hi, afternoon. The market clearly seems to be on steroids right now. What's the take on equities? Stay put, ride the tide, or do you need to juggle somewhere in your portfolio?
Yeah, hi. So we have been maintaining that that for long-term gain in wealth, we need to remain invested in equities. It's just that we have been worried only for the short term in terms of the valuations where the markets are trading, and therefore we have been advising clients to continue with their SIP. But in terms of lump sum, probably they can wait for better opportunities if the markets give some kind of a volatility and correction. This has been one of our thought processes for quite some time, but it's just that the liquidity has been strong enough to give that correction which investors have been waiting for.
Right, indeed. What is it that you've made of the quality of earnings this time around, Amit? Because much unlike what the street was expecting, a muted quarter, that doesn't seem to be the case. Most earnings have managed to be in line, if not a surprise. And there are pockets wherein you're seeing some very positive reportage. We saw selectively within the IT pack with TechM coming out and impressing the street. And then cement as a cluster, I would have to say, has been the most impressive of the lot.
Yes, so that's a good observation there. So the numbers have been all over the place, especially in terms of where the expectations were extremely low. There the positive surprises have been, and where we had certain positive expectations, especially when we look at the consumer companies, because that's a space where the valuations had actually run up pretty high. There, because of GST, we have seen somewhat disruption, though temporary in our view. So the first quarter was the first bit of disruption where the trade channel, which was not so aware of how the business would be conducted in times to come, and we have seen that actually continue even in the initial days of July. But of late there is a good amount of pickup in the business there as well. So the companies where the expectations were high, they are the ones who have disappointed somewhat. But the companies where the expectations were really low, given the fact that the currency headwinds were there, especially for the exporters, they have been able to manage their costs well and report numbers which were slightly better. But overall, we are not too excited by the earnings growth, because we are still looking at a very small set of companies who have reported till now, and within that we find a very small, or let's say a very low single digit earnings growth, which is something which is very difficult for the markets to sustain with the kind of valuations where we are. So therefore, over the next 12 to 18 months, we need to look at a earnings growth which is far better than where we are currently trading.
This is Nayantara joining you from the New Delhi studio. So you're saying that right now too early to look into the earnings season. Maybe you want to wait for the entire results season to end, though we are in the last leg. Let me get your views though on the auto pack. The reason I'm doing that is because you've seen some healthy numbers come out. You spoke about disruptions on account of GST, but they seem to have bucked that trend. For example, look at the Maruti numbers, how they did. I believe M&M has also shown an uptake. Eicher has done well. Would you relook at that space? I do see that you have a pretty good allocation when it comes to the auto ancillaries, about 9%. But would you rejuggle and reconsider increasing the auto exposure you have?
So yes, as I said, this disruption which has happened is very, very temporary in our view. Structurally, we are very excited by the implementation of GST, because I think for over the medium to long term, this means that there will be a slow and steady shift of business from the informal sector to the formal sector. Now, if we look at the auto space, and which we were just now discussing, we may not see so much of a disruption, let's say, at the OEM space, but it's because that is already fairly organized. But when I look at the spare market, which is a fairly unorganized segment of the market, where we have a lot of informal players, there the disruption would be far higher. We will see the companies who are conducting their business with the right manner, with proper taxation, with proper papers, will gradually gain market share from the companies who would not comply. And that's where we find the excitement when we are looking at companies for the long term. And that's what we have tried to identify in the investments which we have done at PLS.
Thanks much for taking the time out and joining in with your take on the markets. Meantime, M&M's July auto sales are currently flashing for you on your screens.